Already.
So it is. Okay, so let's just get started here. Oops. Move all that stuff away. Okay, so everybody, welcome. Thank you for those of us who are joining us with it being tax season and everybody being exhausted. So I definitely appreciate this. So welcome to Enhancing the Accountant Bookkeeper Connection series. There we go. So that is, I'm sure, I think everybody on this call knows me, or we've at least chatted. But that is myself. I guess I don't have the video on today. I'll turn it on. There we go.
There she is.
I'm very tired looking today.
Tired looking. Hey?
I rolled out of bed like literally 20 minutes ago. So
You see,
was
you should have
working till 1
maintained the
a.m.
illusion. We never would have known that if you didn't say it.
Oh, I'm an honest person. That's okay. It's good for people to know that other people struggle during tax season too, right? So there we go. All right. So anyway, so there's myself, Tanya Hills. I am a certified professional bookkeeper, founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. A little bit about myself. The Bookkeepers Bootcamp to qualify for IPBC continuing education credits in 2018, which was a huge feat because we are the very first IPBC member to have a program, a regular ongoing program qualify for CEC credits. So that was really exciting. We're the Intuit Global Firm of the Future for 2018, so still currently the reigning, and was a Canadian runner-up for 2017. I made Practice Ignition's Top 50 Women in Accounting for 2018, the 2018 Inspire Bookkeeper Award winner, and a top 21 influencer in the Canadian bookkeeping world for 2018. Insightful Top Accountant ProAdvisors, or Top 100 ProAdvisors for 2018. HubDoc Top 50 Cloud Accounting Firm 2018 and 2017. I was a Black Swan alumni mentoring under Ron Baker. I'm a Futurepreneur Canada volunteer mentor. I'm a member of the Intuit Trainer Writer Network, Advanced Certified QBO Pro Advisor, Certified QuickBooks Desktop Pro Advisor, although I don't really use desktop anymore, so I don't know why that's still in there. Certified in many apps such as HubDoc, WayPay, T-Sheets Pro. Certified professional bookkeeper through the IPBC with over 20 years bookkeeping and income tax experience. That's a mouthful. A little bit about myself personally. So this is a repeat for those of you who've been to many of my webinars. For those of you who are new, that is not all my family. My daughter and I like to do unique experiences together. That's what tax season basically kind of pays for. I reward myself and my daughter, of course, with that little bit of treat that we go and actually spend the weekends with the cast of our favorite shows or meet some of our favorite bands. So we've got pictures of that in there. There's a family picture of myself, my daughter, my husband on a cruise. And then, of course, there's Rosie, our office manager, and my four-legged fur baby down in the corner. And I'm learning American Sign Language, but that actually has been put on pause. So I should probably take that off of there because I've just had no time to get back to it. So that's not really very current. Okay, continuing education credits. So these webinar series have been approved for the C credits through the IPBC. We do have to submit everyone. I have not gotten the confirmation back that this one does qualify. I don't see any issue. It's just a formality. They have to approve every single one. And when I went to follow up yesterday, because of course time got away from me to find out if they had approved it or not, because I didn't receive the response, I realized when I submitted in, I forgot to submit the form. So they just looked at a blank email. So I've resubmitted. There shouldn't, like I say, shouldn't be a problem. Hopefully I'll know by later today or tomorrow. And when we send out the emails, I'll be able to send out confirmations of that. And of course, if they do qualify this one for it, within a week and a half to 2 weeks, so by the end of next week, is when you should have your certificate. But like I say, they've approved every other one in this series, so this year, so shouldn't be a problem. It's just a formality as far as I'm concerned. There will be 2 polls that must be answered in order to qualify for the credits, and the recording of the webinar will be emailed within 2 days, and again, the certificates will be emailed within 2 weeks. Kata Accounting. So Jonathan and Bob, I've collaborated with them for a number of years. I absolutely love them. They are the top on my list of accountants I refer to, just because we work so well together. And it's just like they're working. They really are an extension of our team. And I really truly feel that way about them, which is why they're just the top. It's just natural that they're the top, definitely to refer to, especially clients that we're doing the bookkeeping on, most especially. Again, just because we work so well together. We do have multiple mutual clients. I think we're probably getting close to the double digits. They work in QBO, so they know it very well. So it's very nice to deal with an accountant who works actually within QBO. Even though I know many don't, that's still fine as well, because I do deal with many accountants, because it's generally up to the, of course, up to the client. They have amazing attention to detail and outstanding customer service. So I really can't say enough about them and the quality of the work. And I've learned from them over the years, and they make me a better bookkeeper. They make me better at my job. So I really appreciate that, guys.
Thank you.
Okay, so that's it. So you guys can take over your portion of it now.
Okay. Well, the screen should be coming up shortly.
Yep.
Today we're tackling what I think, Bob, correct me if I'm wrong, this would be one of your favorite management accounting topics.
Well, I have scars and deep emotional hurts as a result of working in this field for a lot of my career. So yeah, it's favorite might be not the right word, but
something you know a lot about.
It's one that's kept me quite occupied.
So I'm Jonathan Carter. Many consider me to be a thought leader in accounting and technology. I'm a big advocate of Google and Intuit. Member of the inaugural Intuit Accountants Council way back when. That's a 2-year term, so I'm not on the council anymore. I'm elite ProAdvisor Intuit All-Star, winner of the 2018 Inspire Accountant Award for contributions to the future of the industry. We are known collaborators with desires to see improvements across the industry. This is part of the reason we do the webinars, and part of the reason we like to work collaboratively. We do tend to take more time and more pay more attention than just a traditional tax preparer, and I think that has helped our clients, at least in the realm of staying compliant. Yeah, it's something that we're big about with collaboration. I have a lot of experience in the mortgage industry and with rental properties. And as a firm, we do bookkeeping, and we focus on e-commerce, digital and affiliate marketing. And our software development is kind of slowing down a bit, but that's another area where we do a lot. I'm a member of the Japanese Canadian Cultural Center's board. I was brought in for my QuickBooks expertise to help with a system changeover from Simply to QuickBooks Premier. And I'm trying to top them into the cloud, but we're not quite there yet. I'm also an avid fisherman. Yay, fishing season's right after tax season. And MTG and poker player. And I'm wearing black today in mourning over the Leafs season. So Bob, how about, would you like to talk a bit about yourself?
Sure. Welcome everyone. It's great to have you all with us today for this exciting topic of budgets and forecasts. I put a little bit about my schooling there. I have a master's degree in mathematics. After I completed that, I went to work in a CA firm and received my CA designation. I moved from that to public companies working in their financial planning and budgeting departments. Worked on development of relatively complex planning models. Learned a lot about the planning and kind of tasks and the planning process. I moved around in various industries over my career, a lot of public companies, large ones. And then I saw the light and I hung out my own shingle and took on contract roles with a number of companies, and currently enjoying working with Jonathan and working on some great clients. And I find it very interesting and, you know, surprisingly engaging and satisfying. Currently in Georgetown with my wife, our 4 cats, and I've listed a few of my interests and hobbies there.
First, we'll just do a quick recap of sum of management accounting. So
I kind of chuckled when I saw this, when I put that picture in. If you look over to the left, you see that lady sitting there. I've attended board meetings where that was me, and my boss was giving the presentation and had the very important task of flicking the slides forward as he progressed through his talk. So he would, I can remember Bruce would be giving his presentation to the board, and when he was ready to move the slides ahead, he would look at me very formally and give his head a nod once, and I would push button and move the slides, which I had prepared, usually forward to the next one. So yeah, I had a very exciting role in some of these large board meetings.
So the definitions of management accounting, just simply, it's the provision of financial and non-financial decision-making information to managers. So this could be things about pricing, forecasting, which we'll talk about a bit today, and budgeting, which we'll talk more about today. You know, could be all kinds of different things. Volume analysis we went over recently, things like that. We'll have a look at another slide. There's a whole pile of items there that have been listed out, and it's not an inclusive list. So management accounting is the profession that involves partnering in management decision-making, devising planning and performance management systems, and providing expertise in financial reporting, and to assist management in the formulation and implementation of the organization's strategy. A lot of what management accountants do is tie action to strategy. That's something that's very important that we spent a long time learning in my designation process. Basically, who uses it? Insiders use management reporting, outsiders use financial reporting. So you notice to reader statements, that would be something that would go to an outsider, a bank, BDC, an outside investor, potential acquirer, things like that. Whereas the insiders would look at things like the QuickBooks Online output. It can be requested by management or required by statute. It can be required by all kinds of different things. For instance, you know, maybe provincial funding. We had that experience working with Tanya and one of our shared clients, where they were required to have a specific style of or type of reporting in order to satisfy provincial funding. And yeah, management accounting can get really granular. It can get right down to a single employee level in a large organization sometimes, and help you understand productivity, efficiency, things like that. Bob, did you have anything to add on this one?
Just that one of the roles of management accounting is budget and bonus measures. So senior executives are bonused based on achieving certain targets. So of course, those are part of the management accounting framework and are followed very carefully by the company and by the finance department.
Okay. So quiz question number 1. Which of the following is not an example of management accounting? Capital budgeting, budget versus lease, buy versus lease analysis, IT cost structure, geographic profitability, or all of the above qualify?
All right, so the poll is up. Got 33% voting. So it doesn't matter if you get it right or wrong to get your C credits, just as long as you vote. That's the important thing. So we're at, one more person left to vote. So we'll give another 15 seconds. Hopefully they're paying attention and they vote now. Oh, perfect. Okay, perfect. We're at 100% voting, so I will close the poll. So I'm not sure if you guys can all see, we've got 11% actually picked capital budgeting. Nobody picked buy versus lease analysis. 22% picked IT cost structure. 0% for geographic profitability, and 67% selected all of the above. Oh, there we go. Actually, I keep forgetting there's a share results button. So there's the results.
Interesting.
Oh, Bob, we're never on the same wavelength. Oh my God.
So this slide shows that management accounting is a very wide field. And if you look through these topics and this is not all inclusive, but it is the types of things, and you will see that all 4 of the items from the quiz are included in this list and a lot more. So basically it's anything that management could want to know about. And sometimes it goes beyond just the simple financial numbers. It goes to strategies, as you can see on the right-hand side. And it goes to things that maybe aren't measured in terms of just your general ledger and your financial reporting. For example, customer satisfaction could be a management accounting topic. It's providing information to management that they find useful in running the business, going back to the definition that Jonathan talked about.
You can even get into stuff like how the weather affects your sales. It's pretty remarkable how things can get with
risk profiling down there on the bottom, the right-hand side. Insurance companies, I've worked in several insurance companies, and they will always have an executive in charge of risks called the Chief Risk Officer, CRO, the CRO. And that person is meant to keep an eye on the risks that the insurance company is taking. I can remember working with Manulife. They were always very interested in hurricane season and the predictions of how many hurricanes were going to strike in the southern US, because that could have it did have, I'd say, a very large impact on their profitability in some years.
Just to add there, if anybody's interested, because that was my background. I spent 17 years in insurance. And I worked at a company at one point, and of course I, was in underwriting, dealt with some of the risk analysis and whatnot. And there was a company that I worked for at one point that, so we had to, if they, had crossed over a threshold, we had to be able to build a case as to why we wanted to insure them or not. So they actually had a calendar that went back many years, like well over a decade, that we could go and look up. And it was in Calgary. So of course, Calgary, you get lots of hail, you get, whatever the freak winter storms and whatever. But if there was an accident, we could go and look up, okay, was that, on one of those, those storms that they really would kind of forgive because, everybody was in an accident, or was that one of the hail days of one of those claims? So it was really interesting when I worked there, when I was building the cases, to be able to go back and look at that type of information, and just, as to what you're talking about, Bob, with, the weather and all of that taking a play. So I just thought I'd throw that in that way, because I found that rather interesting.
Sorry.
I was just agreeing, Jonathan. Go ahead.
I'd like to take a quick moment and just talk about the value of management accounting for a moment. as we all know, there's going to be a lot of transition in business. The estimate is approximately $800 billion just from baby boomers transitioning their businesses. And the estimate is that 70 to 80% of those will not actually transition or will not transition efficiently. So one of the keys is the lifetime capital gains exemption. And in order to get that, you have to sell shares. And when there's risk that can't be, when there's uncertainty or potential risk, buyers are much less likely to buy the shares. So by having things like budgeting and forecasting, this can be a great step in the right direction to proving that you know your business, you know your risk, and if you can get your budgeting and forecasting to line up relatively well, it shows a really high degree of knowledge about your business. And the reason these are important is when you're selling the business, there's different ways of valuing it, and one of the key drivers is the multiplier. And the better your business knowledge, the better your multiplier that an acquirer would be willing to pay. So this is an area where everybody can start contributing today. It is a bit of a tough sell because the value is uncertain and it's in the future, but the value can be absolutely tremendous. Like the difference between getting 2 times 1 year's revenue versus 7 times 1 year's revenue. I mean, that's a huge increase in your price. So it's somewhere where I would definitely have the conversations with your clients about making sure that they are at least doing budgeting on their own. And I think this is an area where professionals who are on this call can really add value to clients. So, move on. So the objective of these webinars, of course, is to introduce you into ways of providing additional services and additional value to the clients like we just talked about. You're going to have to push for them. These are quite often things that people don't understand the value of it until they actually see it in action. But this is definitely one way to become the trusted advisor that we all want to be. So this is a heck of a slide. Bob, did you want to talk about this one real quick?
Yeah, I apologize that it's so busy, but it gives a good overview of management reporting, management accounting, and I just wanted to point out where the budgeting and forecasting process fits in. So you can see over on the left-hand side at the top, you have basically your tax and financial accounting. That's just strictly the numbers coming out of your ledger, and it's repetitive, and you have your basic rules. But then as you move to the right, you use that data to develop managerial report and capture maybe some non-financial data. And you can see underneath in the middle, you go from cost accounting to performance evaluation and then to planning and decision making. And it's in that planning decision making that your budgeting, as you can see in the second bullet point, that your planning, budgeting, forecasting process will fit in. And down at the bottom, very important, you can see that it's historical on the left and moving towards future-oriented, predictive on the right. And as you move to the right, the value added to the managerial decisions goes from lower value to higher value. So I realize it's busy, but I really like this overview, and it really fits into the management accounting framework.
So financial planning and analysis is, you know, Bob, I'm just going to let you take this because this is your subject matter.
That acronym FP&A. I've been a manager of FP&A and a AVP of FP&A. So it brings back memories. So it's a very large and well-recognized subset of the management accounting field. It covers basically future-oriented thinking and efforts. It's all supplemented with modeling. I've built a lot of future-oriented models over my career. Collaboration analytics, where you might need information from the HR department and the purchasing department. You might have to go to different areas and they collaborate together to allow you to analyze something, and performance reporting. And Jonathan mentioned earlier how it kind of connects your overall higher level strategy to execution and your day-to-day operational performance. So it's a large field, and it includes budgeting and forecasting functions. So this is just a little more detail about each of the 4 areas that are covered by financial planning and analysis. Budgeting, which is a 1-year projection. And I know budgeting is like a cuss word for a lot of us. You kind of think of it as a constraint. Somebody's going to set my budget, how much I can spend, and you know, it certainly has a negative connotation, but when used properly, as I have seen it, it can be really a positive factor in organizing and running a company. And in one of the next slides, we'll talk about some of the advantages of budgeting. But forecasting is higher level projections. They're not done in as much detail. They're not intensive as the budgeting process. And they can go out longer term than a budget. In fact, forecasting usually doesn't have a fixed term, like it's not a 1 year based on the fiscal year of the company. It can be a rolling process where you keep adding a new quarter or new months. Planning and modeling, usually longer term, 5-year projections, and the executives, the owners of the business will quite often want to run sensitivities to various strategies. I remember one time with Shell Canada, we developed our base forecast financial model out 5 years, and the government was going to bring in a new pricing regime, we thought. So our department kept being asked for a new type of sensitivity, like we think the government's going to reduce oil and gas prices, so they're going to control them. So we had to run this sensitivity, that sensitivity. We named our models using letters of the alphabet, A, B, C, D, and so on. We ran so many of them that we ran out of the alphabet and we had to start using AA, A, B, A, C. So we ran really dozens of sensitivities with different assumptions built in. And then you get to your management and performance reporting, where you develop an integrated view of the performance of the company and kind of give management a running trend line of how things are working out in terms of various factors. So in this session, we're just going to focus on budgets and forecasts. Next month, we'll look at longer range planning and the performance reporting aspect. So budgets and forecasts, looking forward into the future, what's the difference between them? And we have a little chart here that compares budgets and forecasts in different categories. So as I mentioned, a budget is a 1-year picture. It's created in advance. It stays fixed. Forecast incorporates rolling results, and once you've created a budget, it usually takes several months. I know larger companies start in September, usually after the summer's over, and it can take 4 to 6 months to complete their budget. And the only thing you know is because it takes so long to complete the budget, as soon as it's finished and approved, it's out of date. It's already wrong because something about the business or the environment has changed. So then you're asked to start developing forecasts and updating the assumptions, but your budget remains fixed. So looking at the different ways of describing budgets and forecasts, the meaning. So budget is a quantitative fixed plan, fixed, and the forecast is an updated future estimate. It quantifies, budgets quantifies what management wants, forecast what is expected to happen based on updated assumptions. Time horizon, fiscal year versus rolling year, the flexibility in terms of changing the numbers and changing your assumptions, static versus update frequently, and the applicability. The budget is a shorter term control tool, and forecast is a medium term view of reality. So the advantages of a budget. The top one is to set goals, and that's the one everyone thinks about. But I want to go counterclockwise on this one. Communication, and it can be both internally and externally. It allows the business and the company to communicate to interested parties where it thinks it's going, where they want to go. So budget can be shared with bankers, for example, potential investors, and it's really a great tool for communicating not just the present, but a little bit of the future. And if that's what people who are thinking of buying into the company or lending to the company, they're much more interested in the future than they are in the past, because that's what will create value. Within the business, it allows different areas to coordinate activities. Everyone prepares input to the budget process from their point of view. Then it's all pulled together, and almost always, once you compile the budget and present it to management, you're going to get pushback. Management's going to say, I don't think I've ever seen a budget that is accepted the first time it's presented to management. Contains, and then they'll decide to shift direction, to spend less quite often, and they'll have to go back to the individual areas, the executives, and to cut back their expectations or whatever. And it's a collaborative process. So the individual executives in charge of each of the areas, like underwriting in an insurance company, they will have discussions with senior executives about kind of what type of approach and what kind of courses they can expect to be given. So there is some communication. Then it's all pulled together to look at the total picture. And then there's messages going back and forth from top level down to the individual departments. So it's all a communication, coordination process. and eventually it's finalized, and the finance area breathes a sigh of relief, because it can be, it's usually a very intensive process. You're making presentations and working long hours to pull it all together. So it's great when the process is finally finished. It leads to efficient operations, I can tell from the description I gave, allow to allocate resources and to plan for the future. So those are some of the advantages of the budget process, but communication and forward-looking information is one of the ones that I think is key. And as Jonathan mentioned, it can have an impact on someone who's looking to purchase the business.
So I'd just like to add in here that the budgeting process can be very different depending on the size of the organization. In a smaller organization where it's essentially management, owner-manager business, I mean, budgeting is a lot less political than in a larger organization. So for instance, at the Cultural Center, we've been working on our budget since November, and we just passed it on Monday. So that gives you an idea of how long the process can be in a large organization. Whereas in a smaller organization where there's less politics at play, it's essentially, here's the decision. And so, like with most of our clients, and I'm making the assumption that everybody on the call has a similar type of client to what we would have, you're in a situation where there's a lot less politics involved, which does make it significantly easier.
Yeah. Your year end at the Cultural Center, Jonathan?
The year end was March 31st. So we were actually 1 month late in approving the budget. Mm-hmm. But the reason being was because, we presented a budget that the board had questions about. Mm-hmm. And we were asked to go back and dig down and answer those questions before it was approved.
Yeah. It's actually pretty common for budgets to be approved a couple of months into the new fiscal year after the year has started. Little humor, one of the very large insurance companies I worked with, they started their budget process in the fall, as I said, but they went through the entire fiscal year without formally approving the so-called budget. And actually, as things changed, they would change the budget. So, but they really did have an approval. They would approve it formally in like November or December, then their year end was December. So that you kind of wonder about that type of process, but yeah. You can run into all kinds of situations. So I just wanted to give a high-level overview of the progress of the budgeting process, like how it rolls out, and this is Jonathan said, in a larger organization. And as you'll see, this is in a manufacturing setting. It's not a official company or anything like that. So we'll get into some of the production budgets and so on. But most processes begin with a sales budget. And I can remember waiting and deadlines passing, and we still didn't have the sales budget. And so once you receive that, it's really the kickoff to the entire budget process. Once you have the sales budget, you can start to develop some additional parameters like expenses that may or may not be related, like variable sales expenses or fixed admin type expenses. So that would be a second step. And then a third step is your production budget, So you have to look at, so this is a manufacturing type organization. So in order to support the sales, you're going to have to manage your production. How many do you build? How many do you want to inventory? And that flows out of the sales budget. So the fourth step is the types of budgets that flow out of production, and costs that your production costs are labor, materials, and overhead, direct overhead. So, and each of those can be a very large and complicated task in themselves. So you kind of think of your staffing and purchasing materials, and whether you're going to have to expand your plant, pay more for hydro and all that kind of stuff. And you'll have to look at managing inventory in that step. So all of these then flow into your cash budget, which is a critical feature of the budgeting. You're going to have sales, you're going to have costs, so you have to pull that all together and determine your cash position. And then out of all of this flows your P&L. So, and you can imagine the process unfolding over several months, over 4 to 6 month process. So your P&L comes out, and then the last step is usually the balance sheet, step 7. So, and each of these, as I say, each of these components or elements take a lot of time and energy, dozens of people in a larger organization. So I just thought it'd be useful to kind of give an overview of the budget process from a larger company perspective. Basically, the same components will be required in a smaller setting, but as Jonathan said, they may be just one person making all decisions.
I'd just like to add just kind of an odd thing here. As accountants, we have certain principles that we need to follow. One of those is being conservative, and this can often create conflict because you'll have sales managers who might come in and they might try to under-predict their sales in order to make sure that they're going to achieve their bonuses and things like that. And that can create some interesting discussions and, well, for lack of a better term, conflicts when people want to have the budget reflect one thing, but whereas from an accounting standpoint and as bookkeepers and as accountants, we're more in touch with the numbers than the sales team. And it can create some interesting conversations, especially considering quite often the sales manager will outrank the accountants in the overall scheme of the hierarchy of the organization. So one of the things that we do as a not-for-profit at the center is we're very conservative in our sales budgets, and we tend to look at our expense side a little bit heftier. We factor in an automatic growth every year based upon history and things like that, just to give us a more conservative approach. Because if we screw up the year, I mean, it could cost the center, and that's something we definitely don't want. So, all right, quiz number 2. So, which would management use to determine the effect of a raw material price increase? A budget or forecast?
Okay, it looks like lots of people are paying attention and voting right away, which is great. We have 2 people left to vote. Again, don't worry about if your answer is right or wrong. We're not going to share who got what, just the total percentages. 1 more person waiting to vote. So maybe give them about 15 more seconds. So far, we've got 25% have chosen budget and 75% have chosen forecast.
Is
All right,
everyone
so we're
voting?
gonna, no, so
Come on,
5 more
guys.
seconds.
Credits.
Yeah, somebody maybe got distracted by a phone or an email that came in or something. Okay. All right, so it's been a minute, so we're gonna end the polling here. And let me just share the results. There we go. So 29% budget and 86% forecast.
That's some interesting math.
Yeah.
150.
Even Sandra behind me went, huh.
Somebody
So she
voted
finds it
twice.
interesting too.
That's a good way to get the correct answer. I was just thinking about the answer to this. Like the expected answer is forecast, but I could see it depends when you find out about the raw material price increase. Like if you find out about that before the start of the year, you would incorporate it in the budget. But the question was meant as you were going through the year, you find out that your raw materials prices are increasing. And at that point, you would not change your budget for it. You'd update your forecast for the increase in prices. So, but I could see how the question itself could be a little confusing.
So that brings us to the end of today's webinar. We're actually ahead of schedule for once. My goodness. That's absolutely shocking. Yeah, there's some interesting things that can be done with budgeting and forecasting and planning. This is quite often when you'll get that entrepreneur and they're trying to complete some kind of planning to present to potential investors. This can create some fascinating projects. I got one on my plate right now that I'm really enjoying working on. So that's it. I don't know, maybe I'm sick that way, but for me it's very.
Well, so let me ask this, I guess, while we wait to see if anybody's going to ask any questions. Type them in. Do you have a favorite app for this? Because I know, like, we're constantly looking at the apps. I know we're going to take another look at for Chile, I think they're called. We're going to take a look at them. I know here I don't really deal with the forecasting and budgeting. Leanne does here because I don't know, and I probably shouldn't admit this on a recording that's going to be shared out in public, but the way that I look at it, I'm very cash flow. So if I don't have the money to buy it in my bank account, I don't buy it. Or if I can't know for a fact I can't afford the payments, I don't do that. And then the forecasting, to me, it's just like having a magic 8 ball. So my mind can't wrap around it. So Leanne handles that part of it because she's great. That's where she really excels. But what she's found is she loves dry run for budgeting, especially because you can move things around. And Leanne, who's your favorite forecasting app? Oh, she's dry run for both is her favorite on that, just because of the flexibility it has to be able to move around the scenarios. So if you want to sit down and say, well, what happens if this cash flow isn't until here and that's not until here, and you can really move things around, which really makes it quite interesting. So that's her favorite. Do you guys have a favorite, and does anybody else out there today have a favorite for any particular reason that you want to type in, into the comments while Bob and Jonathan answer?
Well, I wish I could say something better, and maybe it's a creature of habit, but I think when we tackle this, we're usually tackling it in a spreadsheet, and then we're using the QuickBooks budget feature to get it in there, but then the forecasting is maintained on a spreadsheet. There are positives and negatives to that. If you know how to use them well, you can adapt them to anything. Whereas now I haven't looked at dry run in a long time, like over a year, so it's probably evolved. But like sometimes I found that there were things that were restrictive. You couldn't add or change things in the way you wanted to. It sounds to me like they fixed that, but yeah, like with spreadsheets, you can be pretty creative and do all kinds of different things. I would love to hear the audience's thoughts about FP&A software. We don't currently use any.
Yeah, for me, I don't like the black box approach. So like, because I've had so much experience in it, I like to understand how it all comes together. I definitely know how to put a forecast process, how to pull it together pretty efficiently, and so it's flexible, and using a canned software app, you're forced to follow the way they do things. So I like and of course in the large companies I worked for, they all had their own internally developed forecasting processes. And there would be a lot of support from spreadsheets, like individual departments would fill out a spreadsheet, like a staffing spreadsheet, and then all the multiplication would get done, and kind of the monthly salary budgets, and that would be fed into the overall consolidated model. So
one of the risks with using spreadsheets is, I like the acronym MESS. I don't know if anybody's heard that acronym before, manually entered spreadsheet. And there can be problems created from that if quality assurance is not well done. And you know, like if you put the decimal in the wrong spot, it could completely skew things. And in some instances, especially manufacturing, you can deal with fractions of a penny in a production process that can have a really major impact on the bottom line. So sometimes even rounding it to, you know, up or down to the nearest penny is not what you want to do. I understand what Bob said about the black box. I think one of the concerns is how is the software reading the information, interpreting the information, whatnot. I see Marie. I use YNAB for my personal budgeting. I'm actually one of those weird people who love budgets and budgeting. Laugh out loud. For clients, I've been using Excel as well, but I'd like to look into other apps once my business grows enough to warrant the extra cost. Yeah, sometimes selling the client on it. I don't think you should be paying the cost without the client understanding the value. That's just a general philosophy. What do you think about that, Tanya? We're about to hop in there.
I do agree. What we've started doing here is we've started grooming our clients to go to that next level of advisory services without them really being aware of that's what we're doing. So we have been using Dry Run to do this because, again, we can help them pay off their debt quicker and see it with, again, the way that Dry Run works. So what we do is we add Dry Run on. I eat the cost for the first 3 months. So we pick one client at a time. We have a meeting with them 1 hour a month and, you know, go through everything with them. And so we do that for 3 months. So we call them up and we say, listen, we like to test this out with you. Here's a commitment that we need from you. This is, you know, the results that we're hoping to gain. So we pick clients that we know that we're very sure are going to comply and that it's going to make a difference to. And then after the 3 months, once we've shown them what we've been able to do, then we, you know, turn around and upsell them on that. And then we pick somebody else and start all over on somebody else. So yeah, we're kind of, you know, again, grooming them and moving them up without them even really being aware of it. That they're actually getting those extra advisory services, but once we've proven the value, because with our type of clientele, again, we're dealing with a really small budget conscious, very budget conscious in some cases, clients, either that or they're old school, and just getting them over to QBO, you know, was sometimes, you know, a bit of a stretch, or even, you know, ones that just don't understand, they don't understand the, you know, the value in that yet, because they're like, you know, they're just not there in their business, or not there in the mindset of their business. So, but so that's what we're doing, and we're finding that successful. So
that's a great idea. I think probably one telltale of a client who's not appropriate for it is the one you're always chasing, because I mean,
exactly.
they just don't plan, right?
And
there's no such thing as an accounting or bookkeeping emergency. It's all bad planning. That's all it is.
Exactly. Exactly. And I mean, dry run is $50. So if I'm going to eat $50 a month, plus the cost of either an hour of my time or it's actually Leanne, because again, she does that well. I just feel that I'm a hypocrite when I try to talk to people about it, when I'm like, yeah, I may as well take out my magic 8-ball. It's just, yeah. So Leanne does most of that. But if we're going to cover 3 hours of her time and $150 over 3 months, we want to make sure that we're investing it into our right client. And you're right, it's not that one that you're chasing all the time. It's somebody who's not somebody who's canceling their appointments, not somebody who you can't see, isn't reasonable to see value after you've shown it to them, right? So, and again, somebody that we need to be able to make sure that we can help so that they can see the difference that it made, whether it be in their cash flow or, again, in just paying off debt quicker by, moving things around or whatever, that we've got to be able to make sure that they can see it. So there are clients that we have that will never do that for. I'm not willing to do that because they're not where they need to be.
Yeah.
Yep. All right, everybody's quiet today. It's tax season.
Yeah, everybody has tax free. So I guess we should all log off and go do some T1s, eh?
All right. Yeah.
Larry and Neri poked me about 6 times during this webinar.
Not surprised.
Hey, there's Neri again. Okay.
All right.
Bob, did you have anything you wanted to say in closing?
No, I don't think so. Very interesting topic. And when you get into it, it's a lot of it's about kind of people and process management. So, and that usually adds complexity and interest and requires, management and kind of thinking ahead. So, yeah, it's a great topic. Looking forward to next month too.
Awesome.
Long range planning.
Okay. Awesome.
No, and then just to the recording, the recording will go out in 2 days. It's automatic. So if I don't get the recording set and done in there, it gets sent out with no link. So yes, that will be sent out within 2 days. And it should be up today or tomorrow. I'll be posting it in the Bookkeepers Corner group as well. So there will be plenty of ways to have it, but all attendees will receive a recording for sure. Or anybody who registered. So if you do register for future ones and you can't make it, you'll still get that recording as long as you've registered. Okay.
Tanya, thank you very much for hosting.
Oh, thank you very much.
Thanks to all.
We wouldn't have this without you guys.
Thanks to everyone who sat in with us and helped in the discussion. Really appreciate it.
I really hope that this results in extra revenue for people on this call.
Yeah.
Yep.
This is where it can add a lot of value. Businesses need this help, and it's an additional way to become that trusted advisor.
Yeah.
Absolutely.
And it's one of the first steps in management accounting. Like even a small business can get assistance out of doing a budget and thinking through the budget and projecting forward for a year. So it should be the first and easiest thing to sell to a client.
The last thing I want to say about budgeting is some of the highest net worth individuals that we work with, they all have budgets. They all have personal budgets, and they're more detailed than some of the business budgets that I've seen. So there's real power to budgeting and planning. And that's, if you want to be, retire comfortably and wealthy enough to do the things you want on a personal level, this is something is an absolute must.
Yeah, no, absolutely. I know, like I say, Leanne's kind of grown up on budget. She had to do budgeting for her past business. Her father, budgeted like crazy. So I know it works. I just, my grandfather, I just really took a lot after him, and he was from the wars. He paid his house cash. If you don't have the cash to buy it, you don't buy it. So that's just kind of where I have the difficulty. It's how I was raised versus
budget
but
by
I know there's value.
Budget by bank balance.
Yeah.
Well, and that's exactly it. That's exactly it. If I need it and I don't have the cash for it, it's like, okay, can I afford the payments on it? And I've got to really sit down and budget. So we actually just got 2 new vehicles. We went in just for one for me because my daughter was in a car accident with mine. And then we walk in there and my husband sees, his truck was only a few years old, no problem with it. He sees, like, I swear to God, it's like he pulled in and, you know, this Jeep was sitting, it's a Jeep Grand Cherokee, was sitting on a rock, you know, kind of overlooking him, and the skies opened up and the sun shined down and the angels sang, and he was in love. And so I just said to him, I said, listen, the only way that you can do this, because, you know, he didn't get as much of the trade-in, of course, as you would have thought. It was a $65,000 truck. 4 years old, he got, you know, $17,000 trade-in. So I said to him, if you want this, you need to do 2 overtime days a month. That's it. It's not in our budget. 2 overtime days a month, we'll cover it. So I guess so. I do a little bit of budgeting. So I said, how badly do you want it? So, yep, he had $15,000 from his mother that he put into it that I said, you can't keep that anymore. That needs to go towards this. And 2 overtime days a month. So he chose that. So I guess there, I do use a little bit of budgeting because I said that's the only way to fit it in. So there we go.
It's just less formal and kind of written down than other types of budgets. It's all up here, Tanya.
Exactly. Yeah. All right.
Well, thanks, everybody.
Well, thank you. Yeah, thank you so very much for taking your time out today, and we will see you all next month.
Bye.
Bye, everyone.
Bye.
Bye. Thanks, Bob and Jonathan.